Let's see what Doug Flynn thinks, certified financial planner, co-founder at Flynn Zito. What do you think, Doug?
Yeah, that's the lowest number in about 3 years, and that does confirm that the labor market is beginning to cool, and that's a welcome sign if you want interest rates to be reduced, because that's what the market needs, and what the Fed needs to see is a little bit of a cooling in the labor market. That's counter to what you really want to have happen in that respect, because that means less job openings and perhaps more joblessness. But that is what you then they use as a key to lower interest rates to kick the economy back up again, and that's kind of what we're waiting for.
Kind of the good news maybe for Wall Street versus Main Street. We've had that conversation for years. What about the job market as it changes, though? I mean, one of the things you see is, and I think the firms here in New York are like this. They're more people. They're saying, "Come into work again." Whereas maybe when it wasn't cooling off, the workers had all the power. They could kind of work from wherever they wanted. I mean, do you see changes like that happening, or how do you see that playing out?
Yes, I think it's always a pendulum, and I think the pendulum has swung very far into the worker camp for a long time. So much so that if you're under 30, you don't know any other kind of market. And if you're over 50, like some of us, you also know the kind of market where there's two people fighting for one job. And I'm not saying it needs to get to that extreme, but there's somewhere in the middle that's more of a normal environment. But those under 30s don't know anything else. And so the demands were there and they had to meet them. But as it kind of creeps back, the workers tend to lose some of that hand, if you will, and it goes a little bit back to the employer. And so they can maybe pull back some of those demands, and things change a little bit.
Yeah, let me talk about this meme stock phenomenon again for a minute. There's been a few new developments. So this guy, Keith Gill, on GameStop, that's the guy they call Roaring Kitty, talked about his portfolio and how many shares he owns. But this is interesting from the Wall Street Journal. E-Trade now considering kicking the meme stock leader, Keith Gill, off its platform. And so they're talking about maybe manipulation in the stock. Another new wrinkle in this saga. Do you think they have a point, or?
Well, as whoever's holding that account, in this case E-Trade, they can say whether they want to have you as a client there. So they run the risk of, if they do kick him off, and they'll want to if they believe he is doing stock manipulation, because they don't want any part of that when it comes to the federal and state regulators that are going to start poking around if there is manipulation. And so they can kick him off, but then they risk alienating, from the business perspective, E-Trade that is, the millions and millions of followers that follow him, and maybe, I don't know how many of those have accounts at E-Trade. They could get mad and then take all of their assets. So that's what they're facing. But the fact of the matter is, they looked in there, and before that tweet a month ago, which was like the first time he reared his head in about 3 years, the stock went from below $10 to over 60. And they can prove that he did place some options right before he did that. And so, and there's other things going on here.
Just for people who don't follow that, what can't you do that he might have been doing? Can you explain it, or?
Well, what you can't do is you can't manipulate the stock, but it really, I mean, directly. But so this is really a fine line.
Yeah, I was going to say, it's kind of a fine line on that, right?
It is, and I think that's what they're looking into. They may not, he may technically not have, but then there's the, the technicality, and then there's the spirit of things. I don't know how far they want to go with this, but he hasn't outright, said do this or do that. He's just posting a meme of him leaning into the computer monitor, and now he's posting a screenshot, supposedly, of his current positions, which, what is that saying? It's not saying anything other than telling people what he's doing. Not that there's a law against it, but you can read into that. If he's owning 5 million shares and a bunch of options that are in the money, that position is worth about $200 million. And so that gives people the idea that maybe they want to follow that.
Well, we'll see how we'll follow it. We'll see what comes of this. It's interesting, if nothing else. Doug, thank you as always. We'll talk to you again soon. Doug Flynn on that.